Welcome to Modern Traders. I'm Ben. I'll be your host. Before we get started, I want to invite you over to the free Discord. We're going to do a daily watch list, call outs, free resources, news catalysts, FDA approvals, what have you. And we put a lot of work into trying to get some good info out there for you. So if you get anything out of it, please remember to like and subscribe. Give us a little love with the YouTube algo. So as we discussed a few videos back, the new complete 180 in sentiment from love of all SPACs to hatred of all SPACs has presented us with an interesting opportunity because SPACs are universally hated just on the merit of being a SPAC. A lot of these companies that are actually decent companies with existing customers and existing revenue streams and a lot of potential growth are being completely looked over. And we have noticed a new trend where on de-SPACing, when they actually merge and change ticker name, we see a complete dump out in stock price no matter what the company is, which gives us a huge opportunity to get into a great entry point for long-term positions and more long-term swing positions for companies like the one we're talking about today. Now, when we talked about them before when they were still under the Thunder Bridge name, what stood out to me at the time is, like I said, most of these companies had no form of revenue at all. At the INDI Semi-conductor was already on 12 Tier 1 automotives approved vendor lists and had a backlog of as much as $2 billion worth of orders, not to mention having shipped over 100 million units already at the time. Now, INDI Semiconductor, obviously a semiconductor company, they're making a system on a chip type of thing with the overall goal of basically bringing cars to the evolution to the rolling living rooms that they're going to be in the future. They have an autonomous driving sector. Obviously, that's going to be a huge stepping stone to the future of vehicles in general. They have the connectivity sector, which is a system on a chip that basically just makes it so it integrates with all your existing systems. User experience, since you won't be driving anymore, it's going to be a lot more interactive, basically driving computer. An electrification sector that just help optimize the electrification charging units, to cut back on cost and waste. But now, on top of the qualifications that already set them ahead of so many other SPACs, as was noted on Jim Cramer's show, INDI Semiconductor is one of the few companies that's actually profiting from the worldwide chip shortage that has been devastating the automotive industry in general. And now they're bouncing back a whole lot quicker than most of these SPAC companies after the initial drop off because of having a kick-ass recent earnings call where they actually had 148% year-over-year revenue growth, beating on revenue as well as beating on EPS, exiting the quarter with over 350 million in assets and 30% sequential top line growth expected for the following quarters. The most important thing we have to talk about is coming partnership with Teraxion Systems, which follows existing partnership between INDI and Teraxion, but for a $159 million deal, they'll be acquiring them, which basically expands them into the advanced LiDAR and advanced driver systems, enabling what they call orders of magnitude improvement in both system performance as well as cost, not to mention expanding their geographical footprint. And looking at Teraxion, you can see they are an established company in the high power laser components, optical communication, ultra-fast laser components, and optical sensing components. Well, going through their product line, you can just see they have a lot of actual solid systems, taking them from being limited to their system on a chip, they already have in place, to having an entire product line that complement the systems and just give them a much more expedient timeline. Taking a quick look at the graph, you can see they did reach highs of $15 before SPACs fell from grace and they hit that $10 floor, and actually had a little bit of a spike up before the drop off that we always see after the SPAC mergers now. And after the drop, they did complete a inverse head and shoulders pattern, complete with the breakout to the upside, breaking straight through that $10 resistance and briefly getting above the 11. And then after showing a pretty good amount of strength above 11 and 3 back tests of support, it did finally break through, and then just today run back and test that $10 support, which held pretty nicely. Personally, I'd like to see this either pull back again and test that support at $10 to show us that it's solid support and make a run at 11, or if it does continue upward, I'd like to wait for it to actually break that 11 resistance before starting a kind of position. But this merger is expected to go through in the fourth quarter, which is coming up any day now, and I do expect this to add hype to the stock in general leading up to merger, and then after merger going forward, that obviously is going to expand their profitability and their revenue potential. So it's something that's presenting a good opportunity for swing trades to get in on that hype momentum, or if you're bullish about the company like I am, it's an excellent time to get an entry point for a long-term position. But either way, definitely something to have on your radar, guys. Till next time, I'm Ben. This is Modern Traders. Thanks for stopping by.